This is part two of a series based on proven forex trading money-making strategy for beginning and struggling traders by Caroline Ayuk. So in this video, I'm going to examine a pair that is not mentioned in the book, just to see what happens. Some people are asking me, can I trade all currency pairs using this method? You can, but results may not be as exciting as you'd like. So here I've done is some back testing starting from January 2018. Um, Looks not bad. There's there's a nice rally to the beginning of the year, and then the +5 is when we try to have a trade, and so here it was 1200 points. So we're expecting 1800 points target, which would have been somewhere here. Of course, that didn't get reached, so ended up hitting our stop, which was set to break even, and that's how you get the +5. Anyway, everything looking good. 250, 270, boom, 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 nice. Then we get to the point where we have a consolidation. You can tell that very quickly there's a consolidation because all the candles are hitting the moving averages, and the moving averages are kind of stuck together. So that is a very straightforward, obvious indication that there's a consolidation. You should stay out of it. Finally, things move a little bit. We got a setup, trigger, boom, we'll release this 100 pips. So 100 pips stop loss, we're expecting 150 target. So that would have been somewhere here. However, before 150 target gets hit, what happens? Price reverses rather sharply to the upside. And unfortunately, in this case, it's also showing some bullish signals. So according to the rules, we got stopped out, and now we're looking for to go long. So this is our signal, and this one here would have been our trigger. But no, it's not going to go up like we thought it would. It just keeps on diving. So this one got stopped out pretty much immediately at, I think I forgot to mention it, there would be another loss from here. What was it? Yeah, so this would have been a trigger. Let's see. This was a trigger candle. This was our stop loss, 50. And then things got reversed. It didn't go long, so that would have been another minus 50 here. So I forgot to type that in. Anyway, then we go for another short. Doesn't reach the target either. Gets stopped out at break even, +5, and so on. So when these stuff will happen often, there's a way a more experienced could deal with it by, for example, applying a larger moving average like 50 smooth moving average. And what that does, that will show you that it's actually the main trend is a downtrend. So you're less tempted to take the long trades, and you only concentrate on short setups. You could even enter short here and then just continue riding it down, until maybe the price comes back to the 50, but that's a different strategy. So we're not going to talk about that. I'm just showing you that there are some additional ways to filter that out. Let me close this here. Then what do we got here? Keep moving. And this year, 2018, worked out quite nicely. It's another thing I'd like to mention here. You know, this was a very nice rally, which I believe started around here. And why do we only have 165? Well, this could have gone all the way to 345, 350 pips. We just left it alone. But again, that's not part of our strategy. So what happened here? Price reversed. Everything went below the moving averages, and we had a um, short signal on the moving average oscillator. So we would have to kill the trade over here. So from here to about here, it's about 165 pips. And that's how you do it. If you follow the strategy all the time, by the book, don't try to get fancy, don't try to make any changes, modifications. It's always tempted, you get that one trade where the setup looks so good and you think to yourself, wow, I could have captured so many more pips if I only this and that. Then you start to apply different moving averages, different indicators. Your whole chart becomes bogged down with all kinds of crap, and it just becomes a completely different strategy. So here we're just following the steps from the book, and this was the outcome for the whole year, which in total not too bad, but not as crazy good as GBP USD was. You remember from the previous video. So now we move to the next year. That was 2019. Right away we see a lot of choppiness, up and down, up and down. So this is the beginning of the year consolidation. We could have easily stayed out of this. There's a lot of consolidation here. It's pretty much visible to the naked eye that there's no good trend. The moving averages keep overlapping. The price keeps dancing up and down, sideways, pretty much from here to here. You have steady range. So all of that, all these losses could have been prevented just by looking at that. But anyway, we went with it. We saw the signals, we followed the signals, even though it was choppy, we went with it, and this is the outcome, just a bunch of losses. And there was a good trade that could have gone to 160, but it didn't, because again, we followed the rules, and we only got 40 pips instead. More losses, we got stopped out at break even. Then we get a little bit lucky, nice long trend. First one gives us 150 pips. And we do little pullback. Then we, giving another chance to re-enter in another 120 pips. All works out great. Once again it reverses, and we think, oh great, we're going long now. But if you insert the moving average, for example, once again, you can see this is a major downtrend. So by having the, smooth 50 moving average, you'd only take short trades here. Exit on the rally up, re-enter here, and just keep going until here again. So you can definitely modify this slightly if you don't mind waiting for a long time and taking way bigger profits than this. You could totally ride out those really, really nice long trends, and that would be, a new strategy. But once again, we're not doing that. We're trying to follow the rules from the book to see what happens. So here we only had about 100 pip move out of the 140 that we wanted. But instead, everything reversed and we got stopped out on the reverse signal, which instead gave us a minus 25. Again, following the rules. Someone who is a little bit more picky and wants to modify the strategy to make it their own again, and you can get a little bit more successful. But with the major currency pairs, you don't have to do that. The results are much better. Here's another example where the move expected was 225 pips for the profit, but it only managed to go to 170. Then it turned and it got capped at 65. This was a positive. Then when we went long here, I believe we went from here. Let me just check. That was our signal. That was our trigger. The moving averages are nicely spread out. We got 700. Yeah. So we actually hit this right on the nose. So 105 pips, which is great. One thing that I want to mention around here, I actually have the ATR indicator here. For a lot of these trades, like here, our expectation was 140, but the move only lasted for 100 pips and then it reversed. If you had the ATR filter, for example, so when we went long here, and it only reached about 100 pips, well, we could have simply checked the ATR for this particular pair this time, and as you can see, is 530. So daily average true range is about 530 pips. Sorry, not 530 pips, 53 pips. So knowing the ATR, you could easily avoid this whole reversal and ending up with only 25. So ATR is another good indicator to throw into the mix sometimes, just to know whether this pair is capable of moving 140 pips. Obviously, in this case, it was only capable of moving 53 pips. So the ATR is only 53, and we're expecting it to move 140, which is a little bit unrealistic. So that's a good check to have. Again, adding ATR to the strategy modifies the strategy, and things will drastically change. But this is something you can do, if you want to be a little bit more conservative about your take profits. I don't want this video to be too long, so I've got to speed this up a little bit. This is the end of the 2019, and as you can see, a lot of choppiness. Instead of getting the 150, 135, a lot of choppiness caused break even and bunch of losses. Loss after loss, ended up with more losses than wins in the whole year. You struggle all year, you do your measurements, every day you log in, you check, and after all this work, 300 plus some days, on this particular pair, you get a big nothing back. You actually lose about $2,000. It sucks. So moving on to the 2020, see if that was any better. Here, once again, the pair is showing us that out of the 255 expectation, we only get 140. We check the ATR for this particular time of the year. I believe it was setup trigger. Oh, we went a little bit higher here. Let's see. In any case, it didn't even get to that. And if you check the ATR, it's very low. It's barely 40 pips. So with 40 pips daily moves, we're expecting this thing to go to 255. That's almost crazy. But anyway, we're following the strategy, and these are the results that we're getting. Get a little bit lucky here. 130 pips, a bit of a wipeout here, break even, and then of course, you know, the months of COVID, and we get a big payout, 400 pips, which pretty much saves the day. And after all this nonsense was done, another break even and nice long rally, which gave us, you know, 200, 350, you know, over 550 pips, which is not too bad. And of course, this is a pretty bad consolidation here. It's going up, but it's just based on the moving average of the oscillator and how the candles are touching the moving averages, how the moving average is kind of getting stuck together. It just shows you not to trade. So I didn't even bother. And we have a nice separation here. Nice little move to the upside. You know, we catch 200 pips. Great. And then you see this thing here looks like a fish skeleton or something. You know, it is moving up, but it's so insignificant and so slow. Even when you check the ATR during this move up, you can see there's like 50 pips, 60 pips at the most. Very slow move. Remember, the ATR is not part of the strategy. I'm just showing you how to check if your targets are realistic or not. Then, you know, wipe out, and the whole year so far, up until September 1st, ends up with pretty good profit because of these crazy moves here. Some losses, and overall we have a positive outcome. But if you look at the break from the last 3 years, you know, the outcome is not that exciting. If you remember my GBP/USD video, it was you know, we made over $21,000 in 1 year. Here, after 3 years of a lot of whipsaw and struggles, we end up with about 19,000. So 19,000 in 3 years versus 20 plus thousand in 1 year. This one averages, you know, about $6,300 per year. Still, money is money, and you know, if you don't mind doing all the work on a exotic pair, which may not yield that much of a good profit, you can still do it. You can still add it as long as it doesn't stretch your leverage percentage and you have room to move. You know, remember, money management is the most important. Then you can keep adding those pairs to your portfolio. I just wanted to show you that something like AUDCAD, which is a very erratic, you know, exotic pair, may not necessarily give you the results that you want, because the moves are pretty tragic sometimes. You know, it's either sideways or it's dramatic, and you don't know on what side you're going to be. Anyway, that's it. This is the second video in the series, and I hope you like it. Click thumbs up if you do, and subscribe so we can start growing this channel. And I'll have more videos for you. And of course, in the suggestions, comments, let me know what other videos you'd like to see. Ciao.